Welcome back to Hoosier Homes and Hustles. If you're new to the channel, I'm Jessica Williams, and this is my co-host, Stacy Preston. We're both realtors with eXp Realty in Central Indiana. And if you're passionate about all things real estate, please make sure to hit that like and subscribe button to join the hustle.
So today we're tackling a topic that's not exactly super exciting, but it is important in protecting your real estate investments, and that is insurance. So Jessica, I recently came across a stat that showed that 32% of the average single family mortgage payment is going to insurance and taxes. And that's the highest that's ever been recorded. So we felt this was an important topic to bring in an insurance expert to help us kind of know what we need to know, what we need to be aware of with this, because if you own a home, if you want to own a home, this is definitely something you're going to have to be dealing with, and you need to be able to understand insurance.
And to help us break it all down, we have Ashley Brown with Connor Insurance, an experienced and trusted insurance broker. Just to give a few accolades, she was the 2024's Official Community Choice Awards and 2023 Indiana Agent of the Year. So welcome, Ashley.
Thanks, ladies, for having me today.
Absolutely. Can you give us a little bit of background about yourself?
Yeah, so I dabbled in a little bit of both worlds. I've been in insurance a little over 11 years. I'm an independent broker, so I have about 25 companies that I can shop and service with right now. But I also was a previous State Farm agent. So again, I kind of had that expertise of being captive as well as independent on the back end. But as Stacy said, I know this is a topic that not a lot of people get excited about, but hope to give you guys some invaluable feedback on what I'm seeing in the market. And just remember, I'm also a consumer, so I'm going to share both sides. I can show you my insurance background, but also as a consumer, I know the frustrations that come with it. So I'm going to give you some tips and tricks to hopefully get some premium and ideas back on your policies. Okay.
Awesome.
We definitely appreciate that. So let's start with something we've all noticed, and that's insurance rates going up, as Stacy's already alluded to. What's the average policy increase homeowners are seeing, and why is this happening?
Yeah. So the good thing is I actually run these reports on an annual basis. So I can go back I've been with Connor a little over 8 years, and I can literally go back from the first day that I started. But right now I ended up pulling, I always pull it on the first Tuesday of every month. So I'm going to give you some feedback between what I saw February of 25, and then I went back to December of 24, because these alone are going to be very different percentages, but hopefully it can give you guys some peace of mind that things are looking better than they ever have the last 2 years.
I like to hear that.
Yes. So February of 25, the average auto increase was 13%. The average home increase was 20%, which isn't great, but it is definitely leveling out and going down in a downward pattern. December, actually auto was 13% as well. I would say the last 6 months though, average has been anywhere from 10 to like 17% on auto. So it has gone down just a little bit. But home for December was 28%. So I will say back like June and July, we were looking at 30-40% increases, which I have never seen in this market before. To give you some feedback of why I think that's happening. So, of course, everyone kind of knows that there's these catastrophic claims. So when you hear cat losses, that means it's weather-related events that is happening. The feedback that we're getting from our carriers is that there are so many catastrophic things that are happening throughout the United States. So think wildfires. Not only did it just happen in California, but it also happened in Tennessee last year. Hurricanes, of course, we think Florida. Tornadoes, actually, the number one most common cause of Midwest is wind and hail related claims. So that's why, and we'll talk about this in a little bit, you're seeing the pickup of things that are happening differently under the underwriting front. So actually offering quotes to clients as well as offering renewals to clients. The catastrophic items that are happening to wind and hail, so roof damage, siding damage, is causing a lot of companies to, one, either non-renew policies or not even offer new business quotes because they want to try to lower that risk so that they're not having to have these huge rate increases that are happening on renewals. So there was a lot of restrictions that were put into place this year where, and we could talk about this again in a little bit, but new business wise, they were asking for auto bundles. They wouldn't take roofs over 10 years old. which, I mean, I have a newer construction 2014 built home. Like I was only eligible with a couple of my companies.
Wow.
But what's happening is that the new business restrictions that are coming through, I really think are kind of impacting a lot of the steady increases. So it's making renewal percentages go down, which is a good thing. Again, I've never seen the things that are happening in the last 6 months alone on the back end. So I can kind of breathe again, which is nice. Hopefully you guys can see it too.
So since costs are rising and no one enjoys paying for insurance, what are some savings opportunities that you can offer homeowners, and how might they qualify for those types of discounts?
Yeah. So I'm going to talk a little bit about some auto things that maybe you can take a peek at. So auto, the most common thing that we, of course, can see is maybe looking into like the old grandfathered $100, $250, $500 deductibles, increase those. I mean, to be honest, what's really impacting rates is filing claims. And if you can stray away from filing those small claims, maybe go with a higher deductible of $1,000, that's really going to help offset a little bit of premium on the back end. So we've been suggesting that. And then there's new discounts that are coming back on an annual basis that are available now for clients. So I'm going to name a few. So there's now occupation discounts. So maybe if you're an engineer, if you're a doctor, if you're in education, a teacher, those are actually credits now you can get on auto policies, not home, but auto.
No realtors.
I was going to ask.
Realtors.
Realtors probably not. We're in our car
We're not
too
driving
much.
too much.
Yeah, they don't really like the annual mileage that comes back on that one. But good student discount. If you guys have kids under the age of 25, oh my goodness, make sure this is on your policy. If they can maintain a 3.0 GPA, maybe they didn't get it last semester, but now this next semester they got it. Oh my gosh, add it. That can always be added on at any point.
That's a great idea, especially with teenagers.
Yeah,
and those insurance premiums are. Whew.
Our kids are well aware that that's the goal.
Yeah.
For insurance purposes. Who cares about college? We got to keep the insurance reasonable.
Yeah.
So.
And what's actually really nice too, which is why annual reviews are important. There's education credits now. So maybe you have people that are going back to school. Maybe you have a kid now that went from high school education to now a college graduate. Maybe they didn't maintain that 3.0, but they got their degree. That actually is still a credit. So
Wow.
making sure, you're updating education and occupation, whether it's parents or even kids, that's important. The other thing that I'm noticing is that a lot of carriers are now giving better credits for pay in full discounts. So kind of keep that in mind. That's something that I like to present on all my policies is I know it's a big chunk of change, but if you could maybe pay on a semi-annual basis versus monthly, there's now a lot larger of a percentage with the majority of my carriers than any other time I've seen before. Let me chat a little bit about home too. So you guys have probably seen this, Stacy. You've had an experience where
You're welcome to share that. I don't care if you.
Well, I was going to talk about your roof.
Okay, yeah, I think that's fine. We can definitely go there if you'd like.
So on home, the biggest credit that I'm seeing right now is what they call utility credits. So if you have a newer construction home, you're automatically going to get this. If you have an older construction home and you decide to do some updates, and there's 4 things they look at. They look at the heating and cooling. They look at plumbing. They look at electrical. And the biggest thing by far is the roof. So do not forget, if you go through insurance and they pay for a new roof, I mean, that should be self-explanatory. They go back and update the policy. However, double check. Mm-hmm. I see a lot of agents miss that. And I'll speak on behalf of my team, is that we have an internal claims advocate for a reason. She does these exact things. She pulls documents, files, and makes sure that the policy between the adjuster and in my office, that they communicate together. But for people that do not have a claims adjuster or a claims advocate internally, just know that the carrier, let's just call it Progressive, does not tell the agent you got a new roof. So that makes it really fun, where I just don't want that discount being missed. So that's something as a consumer, please go back and make sure you're looking to ask your carrier if they've gotten the new roof discount applied to the policy. But that's on new purchases too. I would say, when you have a buyer or seller, make sure you're looking at that closing disclosure. Make sure you're doing that inspection. If they can guesstimate the age of the roof, that's a question I ask on every single one of my quotes, because it's not so much to, do the underwriting. That's part of it. But I want to make sure they're getting that credit, because it can be a difference of $50 to thousands, depending on the state that you're in.
What are some common coverage gaps you see most homeowners struggle with?
Well, right now, I would say the most common thing that I'm seeing is replacement cost on roofs specifically. again, there's this weird thing happening in the insurance market right now on new policies. Or I guess it is on renewals as well, where once the roof turns a certain age, there is it's no longer qualified to have replacement costs, which means depreciation would be taken off of claims checks if it's written the other way, called actual cash value. So it's really important when you get that renewal notice in the mail, look at it. If it says your policy, they have to disclose it to you. But I know, again, how many people are getting mailers from their insurance company? I mean, they send mail all the time. But renewal items specifically, it's really important to make sure you're looking at it. If you see anything saying ACV, payment schedule, on your roof, you really want to try to ask them to buy back replacement cost if you can. Okay. So think if the roof is if the roof is 20 years old, you have payment schedule or ACV. They could say, okay, well, we're going to take $1,000 off for every year that roof is old. I mean, essentially, you have no coverage. You guys know how much it is to put a new roof on. So, seeing a lot of that. Service line coverage, you guys have probably seen this too. If you kind of are in an older neighborhood, I would say be very cautious that you're looking at if you got clay piping, 1900, honestly, anything over 1950 older wise, make sure they have service line coverage. Essentially, that's very similar to the plan that you guys have probably seen through Citizens Utility Company. That's now something that insurance can offer. It runs anywhere from like $40 a year to upward of $100 max to have at least $10,000 worth of protection for the buried lines out in the yard. So we see that as a very common claim as well recently, especially this time of year with the water thawing out, roots growing. And
so floodplains can be tricky. If someone's looking at a home in a floodplain, what do they need to know from an insurance perspective? And does a floodplain ever change? How does that impact insurance, all of that stuff?
Yeah, so I would say when I first started at Connor, I think it was about 2016. That was the year that I feel like a lot of people, there was some changes in the flood market. A lot of people that went to go put their house up for sale maybe weren't in a flood zone and now they are. Okay. They kind of got caught in that battle. But there also was a reform around that time that people were trying, and this is, I'm thinking mostly like Broad Ripple area was probably very common. In that time, I was promised that the city was working on reforming that zone. Now, that did not officially go through and pass until this past year. Oh, so again, 8 years it took for them to go from the A-rated zone that required flood down to X. I didn't think it was going to happen, to be honest. I'm like, oh my God. That point. But I would say it doesn't change too often. I think it's... technically, everyone is in a flood zone, but that A-rated, of course, is when that mortgage lender is going to require it. I don't think it would be in real estate agents. If you're talking about investors or real estate agents specifically, it's not a bad thing for maybe to run a flood cert before they go and put the home up for sale or before they buy it. I mean, just look, double check. Personally, all I need is the address. I don't need to know the name, insured, nothing. All flood insurance is rated exactly the same, unlike home and auto where insurance scores are coming into place with the credit scores. Flood insurance is not. It's really cut and dry. You just put the address in and you can either have private or NFIP. And that's what the price is, unfortunately. So again, I don't see a lot of changes. The good news is the flood insurance quotes that I'm working on right now, the price is really good. It's really competitive. It kind of goes in these waves where NFIP is sometimes best 1 year, but then private's best another. And it kind of goes back and forth. So again, completing annual reviews is going to be really, really important because what might have been best last year is probably not going to be best for you this year.
So you kind of answered my next question as far as how often should folks be reviewing their policies to make sure they're properly covered. So annually?
Yeah, I mean, so and this is where I put down some notes. I get really cautious about explaining this more often because this is becoming something that's really impacting pricing. I didn't want to talk too much, on the first question here, but reviewing your policies annually is very, very important. So every one of my clients gets an email 45 days before they renew with certain questions that might be new discounts. We talked about, if you would have asked me 6 years ago, was occupation a discount? No. So discounts there could be new discounts, new coverages. I mean, buried utility line coverage, it's not brand new, but that's a fairly new coverage. So that's something that, you want to keep on your policy. But what I get cautious about explaining, and I want to talk a little bit about insurance scores specifically, is that it's actually not good to shop, and I'm quoting with little, to shop your policy on a 6-month or annual basis. Because what's happening is that insurance scores are now being used to determine pricing on all policies besides flood. An insurance score, I'm going to name a few things that go into that. How long you've been with one carrier, how long you've been continuously insured ever, holding higher liability, claims go into your insurance score, and then a small factor is like credit. And when I say credit, they're not pulling hard inquiries, but they are pulling soft. So with insurance score, if you're moving annually, all these companies now are sharing information and they can see that. So you're gonna start getting dings. So think, when you're shopping for a house or a car, hard inquiries, they can see that. So that's what's happening when you're shopping on an annual basis. You're going from like a 7 insurance score up to a 15. And that, in the lower the score, the better with some companies.
That's such good information, because I know I think a lot of people will shop, every time they get the renewal, not realizing that
it's hurting.
That's hurting.
Yeah, it's hurting. But that's something I think it brings the value of a local agent that can kind of go through that. Running quotes, okay, but switching, that's when you're pulling the trigger. Like be cautious on that. So that's a fine line. Okay, if Progressive went up 60%, oh my goodness, yeah, shop your policy. It's probably in your best interest to move. But if it went up that average 12, 13%, that's normal. I would stay put for another year and maybe, let's check next year. But let's try to see if we can get some credits back to you, occupation, education, new roof, utilities, maybe rerunning your dwelling replacement cost estimator. I don't think that I talked about that before, but I kind of, I mentioned increasing on home premiums. A major factor of that has to do with the increase of rebuilding materials. So what's happening is that it's costing more to rebuild these homes. But on your home policy, you have dwelling protection. It's called replacement cost. Maybe it was $400,000 this year. And now every carrier has a standard percentage based off of, the data that they pull, that's going to increase that $400,000 up next year. But what I'm seeing, if you've been with a certain company for a very long time, I'm thinking more commonly like captive agents like a USAA, State Farm, Allstate. That inflation, if it's set at 13% every year, could you imagine if you've been with them for 3 or 4 years, what your dwelling coverage is? So where we, on an agency standpoint and brokerage standpoint, we're going to rerun your replacement cost estimator. Maybe you're underinsured. Maybe that 13% wasn't enough. More commonly, what I see is that you're overinsured. So what we could do is we can run that replacement cost estimator, bring you back down to today's true value to rebuild, and offset some premium. So there's a lot of things behind the scenes that we try to do to tweak your current policy before we just say, oh, yeah, it's best to move. Yeah, that makes sense.
I'm a client of Ashley's, and I appreciate the annual email. This year, we did a remodel, and I didn't even think about it until I got the email. I'm like, oh, yeah, we did make a few improvements. So if you don't have someone that's checking in on that, that could easily go overlooked, and then you would be under.
Yeah, I see a lot of basement remodels, and people aren't moving. I mean, if they're not moving, they're remodeling their home because they want some square footage. So I would hate to have a water backup claim happen, and we have it marked as unfinished, and now you only had $10,000 worth of coverage, but you just remodeled your basement, put $50,000 in. Oh my goodness, that's important.
Yeah. Ashley, we also use Ashley for ours, and she is sitting in something we redid and made sure we told her about it so we could get proper coverage.
Okay. That's great.
Yeah.
Well, Ashley, this has been so informative. Thank you so much for sharing insights. If our listeners would like to connect with you, what's the best way for them to reach out?
Yeah, you guys, you can reach out via email. You can give me a text, give me a call. I would love to just be a resource for anyone, even if it's like, hey, can you review my policy just to make sure I have the best coverages? Is there anything I should tweak on here? I'm a big advocate about education. So you can reach me at an email. My email is abrown@connorins.com. I'm sure Stacy and Jessica, if you reach out to them, they can help make an introduction. Thanks,
We'll
girls.
have your info in our show notes as well.
Yes. So if you are a homeowner, make sure you are reviewing your policy and taking advantage of all the savings opportunities available.
And if you have questions, be sure to drop them in the comments. Be sure to get them answered.
Let's hustle smarter
Together. See you next time.